to my cloud. Recording in progress. I love hearing that. All right, guys. Again, good morning. This is another iteration of Technical Analysis Thursday, as we call Tech Thursday. And I was mentioning to a few of you that were online that I get excited about Tech Thursday. I don't even know why, right? I got off work. I say, man, I can't wait to do this. I can't wait to share some stuff with the good folks of Wyatt Stocks and Options. Yeah, but here we are, right? I see a lot of you guys came. We have this recorded, so again, you can actually take a look at it a little bit later, right? So in your own leisure, and even for those individuals who can't make it, they can take a look at it. They can take a look at it if they missed this iteration, right? So Technical Analysis Thursday, right? It's really intended for us to go and take a look at the charts, right? We want to look at what exactly is the chart telling us. And I often say that a chart, candlesticks, and indicators allow us to predict or forecast, future events, right, or price action within the market or an ETF or stock, right? The way that I like to start, as you guys know, I always like to start with the broader market. When I say the broader market, I like to look at predictions that I made previously, and of course the markings that I placed on each one of my predictions, just to see where exactly are we in those predictions, right? So we're going to start broader market. We're going to start off with the futures, SPY. We're going to go into the diamonds, the QQQs, the triple Qs, and then we're going to go into the Russell 2000, right? So let's start off with the SPY. First and foremost, can you guys see my screen? Yes, no, maybe so.
Yes, sir.
Yes.
Yeah, so today is Thursday, Tech Thursday, right? So that means that this candle here was Wednesday, right? And as you guys can notice, we got Wednesday, we got Tuesday, and we got Monday, right? And what did I say about what did I say on the YouTube channel, right? My prediction was that we're going to rally, right? We're going to rally a little bit past the mean, and we know the mean is here, right? We know the mean is $451, right? And right after we rally to the mean, right, I said that we were going to come down. Mind you, we did rally. We did just that. But instead of rally just to the mean, we went past the mean, right? You guys can see here, right? So this was Friday. So Monday we went a little bit higher, right? We went past my prediction of $452, and we went as high as $457, right? So Tuesday, I missed Tuesday by $1, right? I was off $1, and then he went even higher than that. And why is this important? Because it's important. This is important because if you look at the forecast, you can easily make different calls or use different strategies, employ different strategies in order for you to take some profits on this one, right? For example, if you'd have bought calls on Monday, right? Weekly calls, right? If you would have bought them, let's say here, $449, right? By Wednesday, it went to $457, you would have made profits. Make sense? And my prediction was that Tuesday, right? Monday, Tuesday, we're going to rally, and then Wednesday, we're going to come down, right? So boom, you could have made money here, right? This is not over with. I'm still predicting that the market is going to come down a little bit lower, maybe testing 440, 441, right? Being that this is support area for SPY, right? Again, I predicted that the first 2 days, it was going to go to 452. It went past that on Wednesday, right? And here, you notice one thing, right? Can somebody tell me what this is here? Not you, D, because you and I spoke about this.
It's a gap.
Yeah, it's a gap, right? What is actually the technical name for this gap, right? It's a compound word. It starts with an R.
I see rising window.
I don't know that one, boss.
Is it a rising window?
Yeah, it's a rising window. Yeah. So when we use these terms that you're not familiar with, I really urge you guys to actually look them up, right? It's a rising window, right? Rising window. And a rising window occurs when, let's see. Oh, no, I don't want to do that. And a rising window occurs, I'm like all over the place today. A rising window occurs when the closing, right, of candle one, right, jumps, right, to another level, right, causing a gap between candle number two, right? I'm going to say that again. A rising window occurs whenever the closing, right, the closing of the first candle, right, creates a gap or a window between candle number two opening, right? So this gap here is the byproduct of a rising window. And as we know, whenever we see rising window, we see gaps. What happened during gaps, right? The stock usually comes down. Make sense? So that's why my prediction was that this is going to go up and it's going to come down. But this is a clear indication that 80% of the time, what happens is that these gaps are filled, right? If you looked at the video that I posted for the forecast, I was expecting that this window here was gonna fill earlier window. That's why we're gonna see the stock actually going higher. So I'm still predicting that Thursday and Friday we're gonna see a pullback, right? We'll see where exactly that pullback is. I was predicting to be around $440, but hey, we'll see, right? Let's go to the next one, right? We say we're going to talk about the diamonds. I see where we have no prediction with the diamonds. Again, I left my marks there for the diamonds. And the diamonds, I was a little bit conservative with the diamonds because I thought the diamonds were not going to rally that much, to be honest with you. So my prediction for the diamonds was that they were going to rally for the first few days. If this thing, okay. See here, right? So my prediction for the diamonds here was that we were going to have a small little rally, right? And it was going to tap right here at $352. But unfortunately, it went higher than that. Look at this. And what do you see here? Another rising window or gap, as we call it, right? So another gap here. And we know this gap has to be filled, right? Or would be filled eventually, right? I say it was going to rally up and come down, but we saw it go past that, and now it's going to come down, right? If we look at the broader market, if we look at the futures right now, the market is opening a little bit lower than it did yesterday, right? So let's look at the triple Qs, right? What did we say the triple Qs were going to do?
Quick question. When you mention the diamonds, so I'm just driving, which one is that?
The QQQs.
Okay, that's what I thought. All right, thanks.
Yeah, the QQQs are the diamonds. So for the diamonds, right? Again, this is Wednesday, Tuesday, Monday. My prediction was that we were going to come to $364. Again, I haven't taken these marks off. You can see the forecast that I did. I predicted that it was going to come to $364. Hence, that's why I bought some calls for Monday. But it went higher than that, right? It closed at 366. So I was off by $2 on this one. Okay. They closed at 366.78. So I was off about $2.27, right? That's not bad. So if you'd have bought some calls on Monday, right, you could have easily made some money. And if you see right here, the pre-market, you notice that the Qs, right, is trading at $361.97, roughly at 362. So this is going to open a little bit lower, right? Amazingly, it's probably going to open very close to here where it's trading at. And we should see this gap filled, as Remember, I drew this, yeah, I drew this, I think I drew this recently for the forecast. Amazingly closing up here, right? And filling this gap again. So I'm still projecting that the Qs are going to come to like $352 roughly, right? Testing the support area in the next few days. Let's look at the other ones, the Russell 2000 IWM. And as you can imagine, whenever I do these, ladies and gentlemen, I place calls and puts on these particular trades, being that I feel confident that based on my technical analysis, that's what's going to happen. Interesting. So my prediction for this one, again, these are the Russell 2000, Wednesday, Tuesday, Monday, right? So I predicted that it was going to come here. I was very conservative in this one, $201, but it went as high as 202.78. And then on Wednesday, it went even higher than that, right? But as you can see in the pre-market, it's down $3. Right? So again, if you would have bought calls on Monday and waited to Tuesday to sell, right? You could have bought it at 199, sold it at 202. You could have made some easy profits. Wednesday, Tuesday, Monday, yep. So that's it for all these. I'm still expecting the market to come down. Hence these right here, they should come down a little bit, right? Testing again, I have it testing 191, but we'll see what happens on that. And this is a long prediction for me. So we're talking about 2 weeks out. I see IWM on the Russell 2000 testing 191 or going as far down as 160, I believe I had marked on here. Any questions on this?
Would any of this be affected by the new inflation numbers, which are the highest in 40 years?
Yes. Yes, I'm glad that you mentioned that. And that's why I don't know if you guys noticed what I put on the Slack page, what to look for today. Did anybody take a look at that? Yeah, what to expect from the market today. I think Jay mentioned it the other day too, how those things were going to affect the market. So we're going to take a look at. Yeah,
it was like the CPI number. Yeah. So
yeah, exactly.
Oh no, sorry to interrupt. I just got a notification. It's just ironic. I just got a notification that the what is it? It says the treasury yield jumps above 1.98% today. So usually, like when the treasury yields rise, people start buying more treasury and take their money out of stocks too. I'm not 100% sure, but is that something that happens?
Yeah, bonds versus equities. Whenever bonds are being purchased, the equity market does the reverse. That's the reciprocal of it, right? You're absolutely right. I talked about a few things that we can expect from the market today and things that were going to affect the market. I placed this here earlier. I said at 8:30 Eastern Standard Time, we have a few important economical reports. The initial jobless claims, right? Continuous claims, the consumer price index, and I put a little URL here that I wanted you guys to read if you got a chance in the consumer CPI numbers, right? In addition to that, the VIX. We know the VIX plays a major part, fear in the market. So these were things that hopefully you got a chance to look at. If you didn't, I highly recommend that you take a look at it before the market opens, just to understand and to learn as you grow into trading and also investing. So when we look at the broader market, you saw my predictions. But now you're seeing here, right, how the market is red. The Russell 2000, as I predicted, it's actually coming down. We have the NASDAQ, right, the Qs, the triple Qs, they're down 1.21%. S&P 500 is down, right? The diamonds, the Dow Jones is down. And if you follow the report, look at this. Look at the CPI number, 0.06. Who knows what the CPI number is? What exactly does it what's the word? Oh, that's still good. Okay, who knows what the CPI numbers actually looks at? The consumer price index. Well, if you don't know, definitely look that up because it's important information that you want to know as a trader. But the bottom line is that the CPI numbers here have a huge impact in the market. And as you notice that in January, and Jay and I were actually discussing this yesterday morning, well, my morning, were that the CPI numbers were expected to be bad, right? They're actually higher. And the core CPI numbers are just as higher too than expected. And even Jay actually posted a news article on this yesterday. But these numbers here play a major impact in the market, which you see here, red. Then you have the amber ones, and then you have the yellow ones. So when I mention this is because it's important to realize that these economical reports have a huge impact on how the market's going to play out. Look at that.
It's widely used to measure inflation.
Yeah, but these are the food and goods, right? The prices of food and goods in what rural areas, right?
Yeah. Hi, check. You hear me?
Yeah, that's exactly what that is. It's important that you guys know these reports.
Right.
Yeah, I've mentioned this a few times already. Like these economical reports and their impact is important to the market. So if you're trading, right, the first thing you want to do is you want to look at your operation environment, and the market is your operation environment. So if this core CPI, we get that almost once a month. We get the initial claims every week. Right, these numbers play a moderate impact, huge impact. Numbers are bad. The market is red. The VIX is up. A lot of fear, inflation. This is up. So that's why we bought puts yesterday. That's why it's very important for you to take a look at the market forecast. But on a positive note, if you didn't get any puts, on a positive note, there's a few stocks that I wanted to talk to you about. We haven't really discussed this for a while, but I just want to talk about one stock in particular that I'm really, really looking into getting into is because it has earnings coming up very soon. And I think it's going to do really well for earnings. I left my notes downstairs, but either way. So a few stocks, right? Cliffs, we traded that a few times. Actually, D actually mentioned that one. Roblox, I'm excited about Cliffs, Roblox, and I'm definitely excited about Under Armour, right? These three in particular, Roblox, Cliffs, and Under Armour. I looked at the chart earlier and I just love the chart, right? Each and every one of these charts. And more importantly, these websites, Earnings Whispers and Zacks.com, they believe they're going to beat earnings. I'm not sure if they're going to beat earnings. I just like to use the run up, right? I like to use the price action run up into earnings. Right. So again, Cliffs is one that I'm truly interested in. It reports earning, I believe tomorrow before the market opens. Roblox is next week, the 15th. And then we have Under Armour. It's actually tomorrow too. Right. One, two, three. Right. So the one that I really like out of all of them, to be honest with you, is my favorite one will be Under Armour, then Roblox, and then Cliffs. So I just want to go over one chart right quick so we can actually take a look at it and see what I'm seeing, right? Is it going to beat earnings? I don't know. So it's difficult to predict a stock when you have such a huge catalyst in the forefront, right? Because earnings can take a stock up or down, right? Whenever I put in a community that I bought Disney, right? I did the ratio 4-to-1. I bought 20 Disney, right? So that means I bought 20 Disney and I bought 20 calls and 4 puts. Because if Disney went up, I thought Disney was going to go up anyway. Right? It's up almost 7% right now in the pre-market after hours. But if it would have went down, I would have been able to recoup my money and still been golding as far as that trade. So that's why plan earnings to me is very risky, but I like to play the earnings run up actually going into earnings. Any questions thus far?
Could you repeat the date for those earnings? Those 3.
11th of Feb, right here. Roblox is the 15th next week, and Cliffs is 11th. All right. I'm also interested in Nvidia too, right? But in that order would be Under Armour, Roblox, and then Cliffs. So just want to take a look at one chart with you guys. The Under Armour chart. Let's take a look at this bad boy here. Make sure I'm sharing this screen. Okay, sharing. So what I like about the Under Armour, okay, I hate that it reports earnings tomorrow before the market opens, right? That's kind of scary to me, right? But when I was thinking about this one in particular, and what's this? A few things. One, for the last few days on Under Armour, I've noticed that that's been increasing volume, right? Increasing volume on Under Armour. I like to see that, right? The mean is right here, $19.51. It's trading right, just a little bit right above the mean, right? So it's trading at $20.33. If it reports earnings tomorrow, easily predict the stock to reach $21 or even as high as $22 if it reports really good earnings, right? If it doesn't report good earnings, it can easily go to $18 or lower. Makes sense. So for this one in particular, I was really looking into playing the earnings run up, but because the market is bearish today, I would not get in it, right? And if I were to get in it in order for me to mitigate risk, I will play both sides because this stock can only go up or down, right? If I think the stock is going to go up, not being 100% sure, I like my ratio to be at least a 2-to-1. If I buy 2 calls, I buy 1 put, right? That's what I like to play. That's what I did with Disney. I bought 20 calls and I bought 5 puts. Make sense? And one, you guys know the first thing I like to look at is the candle itself, right? This here, it's not the most bullish candle, but it's still a bullish doji, right? It looks like a hammer, right? But when you see the strength of the volume, right? The volume is steadily going up. And you probably don't know this concept of squeezes, right? Whenever you see a squeeze, whenever you see dots on the TTM squeeze, that's a sign that that's a big movement that's ready to happen, right? There's a big movement that's ready to happen. And predicting this movement to me, if I was I'll be predicting this movement to be here close to $22, $21.98 roughly, right? If that doesn't work out, right, I can definitely see this stock testing this support area right here of $18. Right?
I have a question.
What's your question?
Question was that, do you predict it to move up there because of the previous resistance, which happened earlier?
Yeah, so I looked at the support and resistance and I looked at the historical volatility earlier. So all these stocks I already done my research on. The historical volatility, it lets you know on average during earnings how what's the price movement from where exactly it was trading at. So in essence, it's like the ATRs, right? If the ATR, if one stock on average during earnings, it moves 2 ATRs and the one ATR is like $4, that means it usually moves $8. Make sense? So that's how like the historical volatility plays into it. Does that make sense?
Yeah, I got you. Makes
Like
sense.
Disney, for example, Disney usually moves about $8 when it has earnings. For you guys who were on the call with me, I said that Disney had 2 gaps. And I mentioned to someone, Disney is going to either hit 152 or it's going to hit 157. And Disney hit 157.
Right.
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 So it's the same thing with this. It's like looking at the support areas and looking at the historical volatility and playing those 2 numbers against each other. Right?
Okay, got you.
Yeah. And right here for this demonstration, I'm just looking at the support and resistance areas. This has support right here at $18.08, right? So I have it marked at $18.13 if it goes to the downside. And I got this marked here at $21.98. So if I was trading this one in particular, knowing that my ratio is always 2 to 1, I will be buying 2 calls and saving my money with 1 put. Because if 2 calls here cost me, let's see, and of course I'd be buying for the 18 because it expires tomorrow. So if 1 call costs me, and I would not buy in the money, right? Because I'm expecting a huge movement for the upside. So I'll be buying something close right here to $20.50. So let's say I'm buying here, right? I'm gonna buy at least 2 calls and I'm gonna buy like 1 put. So I'm spending like $300. Again, if the stock goes down, I make money. If the stock goes, well, if the stock goes up, I make money here on this one, right? If it doesn't go up, I lose that $100. Make sense?
Yeah, that makes sense with the ratio.
Yeah.
Makes sense.
So I do this very often because 1, it's extremely risky to play earnings, right? Extremely risky. I usually don't even recommend for us to actually, go past earnings. But sometimes some stocks have been beat up for quite some time. I did the same thing with Snap. I did the same thing. I usually do the 4 to 1 ratio of 5 to 1. With Snap, I bought 5 to 1. That means I bought 5 calls and I bought 1 put. And luckily, Snap, when it went up like 20, I think $20. So even though I spent, a few $1,000s on my calls and a few $1,000s on my puts, by the time Snap went up so much that I made an extra, like my puts didn't even matter. Makes sense. So let's say I made about $18,500 on Snap from the calls, and I lost like $1,800 on the puts. Right, 18,000 and $1,800. I still profited at least $16,000. Make sense?
Yeah, yeah.
Because
Yes, sir.
stocks. So that's the beauty of this. And I myself, I like to play very close to the money, right? I always buy either right below the money or just, 1, but 2, yeah, 2 chains or 2 strikes below it. So if the money right here is $20, I'm gonna buy like $20.50 or $21 for the calls. Right. For the puts, if $20.50 is right at the money, I'm gonna buy the 20 call. I mean the 20 puts. Does that make sense? So when people ask me, what are you buying? I mean, don't worry about what I'm buying. You need to choose what you're buying. Right. Because I may buy in the money just because I have the money to spare. So I'm, and if I tell you I bought 100 of these here, like, what are you gonna do? Try to find something that is reasonable to where you're buying. Make sense?
Yeah, that makes total sense. I got you.
Yeah.
It
So-
makes sense because I'm sorry to interrupt.
No, go ahead, Joe.
Also, when you're looking at it, are you looking at the open interest? Did they give you some type of indicator of how much people are buying in the area? I know you mentioned that you buy just outside the money, but if I can't afford that, I can use that that tool to try to help, right?
Yeah, exactly. I look, yeah, I do look at the open interest in the option chain, as you mentioned, right? So I'm going here for, it has earnings on the 11th. So I'm seeing what the volume was, not the volume, but the open interest, because the market hasn't opened yet. So I'm looking at for the 11th of Feb, right? Expiration. That's 23,000 total open interest versus 6,000 puts. So the ratio here is like close to 4-1, isn't it? Maybe 3.6-1, right? So it's very close though. That means like, 4 people saying this thing is gonna go up, and one person says it's gonna go up. I mean down. Let's look at the Disney, right? Even with Disney, Disney destroyed earnings today, right? It's at 156. So if we just look at the option chain for today for Disney, because they reported earnings, right? Look at this, 96 versus 93. Right? I'm not saying that, you have to look at open interest all the time, but it's something to look at. Right? The first thing I like to look at is what am I'm trusting myself, I'm trusting my chart analysis, and then I look at different things in order to validate my thesis, as I say. Right? So just because, if this was 80,000 and this was 93,000, I'm not gonna say, well, I'm buying all puts. That's not how I roll. I'm trusting myself, and then, okay, people are buying this. Oh, that's fine, or whatever. So, but to play it safe, like this is like a 1-on-1 ratio here. If you were just looking at this to determine, okay, I don't know what to buy, I'm gonna buy, calls and puts. No, you gotta trust the chart. If you look at Disney, this is what I did for Disney right here. Right, Disney has a gap right here. Disney has another gap right here. When I mentioned this, and Disney has a really good company, right? And here, Disney closed on a nice little green candle here, volume here, right? I was excited about this after a red day. So Disney here at a hammer candlestick. I told someone it's gonna fill this gap. If it beats earnings, it's gonna fill this gap, which I felt it's gonna beat earnings. I say it's gonna fill this, and it's gonna even come here in the next few days or so. Not only did Disney fill the gap yesterday for those individuals that would have traded Disney, just trading it filled the gap yesterday, but today, because they already filled that gap and it beat earnings, look where it's trading at right now. Miraculously, it's trading above 150, 155. If you see here, right, in the pre-market, it's at 156.71. Right, my prediction for it was going to be 155.50 right here. But Disney is at 156.90 something, right? Because it has resistance over here. Make sense?
Yep.
It almost makes too much sense.
Man, dude,
Um,
who's in Disney?
I'm in Disney. I got 20
Oh
contracts.
my goodness. Woo.
I think
So
somebody else
$9
is
in the
in.
pre-market, bro.
I have 7
Yeah.
contracts left.
Yeah.
So do you think Disney's gonna still run up or no?
I don't really care what it does. I'm taking my profits. Why you so worried about that?
No, because I have 5 that expire on 2/11, and then I have 5 that expire on in March. So I wasn't sure if I should keep some for March. That's all.
Yeah, but
Always
I mean,
rebuy, bro. You can always
yeah,
rebuy.
see profits, take
Take
profits,
profit,
bro.
yeah.
Like you should never worry about what is it gonna keep doing. Like our job is to be consistent and make money. I never care what it's gonna do tomorrow.
Yeah, no, I get it. I gotta get into that frame.
Yeah.
Hey, Castro,
So
we missed DraftKings, man. It's supposed to be our yearly Super Bowl DraftKings run up.
yeah, I know,
We
bro.
missed it. I
I
just
know.
looked at it. I was like, oh man, we supposed to have been on this last week.
Yeah, I know. Yeah, and you mentioned it too. You mentioned it.
Yeah, I forgot. So usually DraftKings, and just for the team, usually DraftKings run up for the Super Bowl, because people bet, right? On the Super Bowl and the spread. So usually DraftKings always does good around Super Bowl, NBA Finals, stuff like that. Big 1-day events type stuff.
Yeah, I think where's D? I was gonna actually pass the baton to D because I wanted her to share one of her plays with us that she put in the group. But before I do that and pass the baton, did anybody get on the weekly play open?
Yep, I did.
Yes,
Okay.
I did also.
How did you guys do on it?
I'm up like $100 and something right now.
Okay.
Using the call strategy. February 25th. Yeah, $10 call.
Mhm.
I think I did like 20 by 20%, and I got out.
Nice. Yeah. Yeah, that's really good. You always want to aim around there, 20-30%. You know, that's a really good good time to get out. Right. Yeah, I got into it's actually, yeah, it's down in the pre-market, right? Because the market was going to be red because I mentioned that Tuesday, Wednesday, or Thursday, the market was going to be red. This was intended to be a quick getting out. We had there was another play that I put on technical analysis. I definitely want to talk to you guys about this one in particular before Miss Love gets on here and blesses with her. Oh, what was it? Did I put it on here? Did I put in discussions? Oh, she's driving. She won't be able to present this at all. Yeah, I don't know where I placed that play. Was it trades? Or I think it was my trades. Yeah, there was one particular chart that I really fell in love with. Where was it? Team, I have no idea where I placed it at. I have no idea. It wasn't discussions. It wasn't. Yeah.
No caller.
Nope. No clue. None. But we have time for one. I think this play today is going to do really well. And I've been studying and actually trading this stock for a while, right? For every week, for the most part, I get into this stock. And I did this stock with you guys a little while ago. I talked about Lemonade, we know the stock. And I was mentioning that it has over a 30% short interest. That means that 30% of their float or the stocks that there's available for trading is being shorted, right? And with the market red, right? And of course, using our strategy and this stock hitting, I was looking for this particular stock to trade around here, the mean, before I decided to buy any puts on it, right? That's what I was waiting for, right? Today may be that day. It actually reports earnings at the end of Feb. But again, what we've seen this far with this stock, it runs up close to the mean, it comes down, runs to the mean, comes down, runs to the mean, comes down, right? That's the same thing over and over again. Here, it ran all the way to the mean and it came down, right? So in essence, I'm looking for a trade. I'm looking for this stock to either rally very close to the mean, or if I see that it's going to drop today, I'm looking to buy some puts. And let's see here. I'm interested in buying some puts, right? Wherever it opens, it's at 29. It's at 29.61 right now. All right. Damn, it's lower than what I thought it was going to be at. Yeah, because the market's red. Yeah, it's way low. This would be a good day trade, though. I was looking for, it would have been perfect if it would have went up here. But either way, this would be a good day trade. So it's gonna open here. I'm looking to take profits around this area. Right? And that's about 20, let's say $28 for a quick day trade. All right. I'm looking to take profits around here. All right. It's going to open right now at $20.70. This would be a good day trade or even swing trade for tomorrow. Right? Taking profits around 28 bucks. So that's about $1.60. And the beauty of this one though is very, very affordable, right? Lemonade. Let's look at the open interest just for today, right? The next few days. All right. See, the open interest on this one is 5,000 versus 3,700. For the 18th, 19,000 versus 26, right? Remember that, right? We're buying puts, right? So when we buy puts, if we want to do a comparison, here, 3,400, let's round it off to 4,000, a little bit less. But if you look at here for the 18th, it's a little bit more, 23,000, right? If you want to compare. And if you buy for the 18th, if you straight up day trading this one, or even swing trading, this presents a beautiful play for, you can buy for like $100 because it's going to open around that area. $100, right? Here, and easily double your money by today. Easily, all right? With the market being bearish, I truly see this, and I'm going to buy these puts too. I'm probably going to buy the 29 puts on it, right? Buying these and just riding that sucker just for today. Again, it has support at $28 roughly. It's going to open around $29.70, as we see $29.60, and just riding that bad boy all the way down, right? If it rallies in the next few days, catching it right here again, right? Buying puts down, right? I've been doing that for the last few weeks, the same thing, right? So technical analysis, right? This was a bullish candle here, but the market is bearish, taking this whole thing down, right? And if the market is the overall, mothership. So if the market is down, is doing this thing, most stocks are going to follow the market. So as this thing open, we can ride this sucker all the way down, buying some puts. This would be a great day trade for today and selling it at 28 bucks. That's about $1.60. So we can make about at least 50% on the trade. Questions, comments?
Sounds good.
Quick question, not really quick question, but you mentioned two stocks that you was interested in that you want to look out for. It's Under Armour, Roadblock, and it was the third one. You can't recall what it was.
CLF.
See, okay, thanks.
Cliff's has been killing it for the last few days, bro. Look at it. Boom, 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 boom. And it has earnings coming up too. I think it may do really well for earnings. If it beats earnings, I can easily see it come to 24 bucks. And if you see Cliff here, very affordable, right? $1.16, 91 cents. Is trading a little bit low today, right? Because the market is down, right? So, but if I were to get in this particular stock, I will wait till like very close to the end of the day, because the market is going to take it down. It's going to test it today. And if it can stand the test of time, I think I'll get in it. So that's one that I mentioned. The other one that I mentioned was Under Armour. Yeah, we talked about this one, right? The Under Armour one. It has a squeeze here. Really has me thinking that this is going to open, definitely higher. I think it's going to beat earnings, and like I say, $22 would be my price target for the upside on it. My down target on it would probably be here. Right. And the last one was, what was it? Oh, Roblox or BLX. The chart again, it's just a beautiful chart, right? Trading right below the mean. And Roblox has been one of those companies that's, for some reason, it took a dip, but it looks like it was trying to find its way home. So it has earnings next week on the 16th. Nice, right? Staircase to heaven, as it's called, on a volume. I'd like to see that. So in situations, environments such as these, when we see the market is bearish, you never want to enter a stock, right? Like straight up, you want to wait to see what exactly the stock does, right? And waiting could be 15, 20, 30 minutes, right? If the stock holds up, like when we did with MP, if the stock holds up its weight around that support area, right? That support area being, its previous close or be below the previous candle, that means the stock has strength, right? I say again, if the stock in particular, you see this candle here, it opened up at 65.46, it closed at $70.88 roughly. If the stock holds here, right, at least 50%. Let me draw this so you guys can see. My rule is that if the stock trades right here, at least 50% of this previous candle, I'm going to actually get in it. Right. If it trades here, if it trades below here, I'm not going to buy calls on it because it's showing me that it's weak, especially in such a bearish market that we're going to get into. And right now in the pre-market is at $67.89. So it's gonna open right here, right? If it goes below that, I'm not looking to trade or make any calls on it. I'm just gonna watch it.
Hey, Castro, you said if it goes below what number, sir?
If it goes below the half of the previous candle. So the previous candle, it opened up at $65.26, right? So the rule is that anything 50% and above the previous candle, the stock is still bullish, right? This one opened up at 65.45 and it closed at what, $70.58, right? So the difference between this year's $5. So anything at $2.50, right? If it opens up here at 68 and trades higher than that, I'm still going to enter this position because I still think it's bullish. Make sense?
Yes, thank you.
The other question I have regarding that is when you say hold, you said that normally to enter that trade, if it's a bad market like today, or I mean, I won't say bad, but it's down, bullish. Are we waiting towards the end of the day, or it just really just depends?
So I like to wait like 15 or 30 minutes.
Okay.
If you saw the MP, we traded MP about 3 weeks ago, and we saw MP just held right above the mean, right? It held for like 10, 15 minutes strong. When the market was bearish and all the stocks were going down, MP was just holding. And as soon as the selling stopped, MP just took off that day and we got out of it. So that's what you want to see. You want to just wait, right? You want to chill and wait and see what it does, because it's like a support and resistance area. So 50% below the 50% line, right? That means it has weakness. Above the 50% line, opening above the 50% line, that means it has strength in a down market.
Okay. And then the other factor, the indicators that you're looking at, or is like the RSI and things like that in that 15 minutes as well, right? If I'm assuming.
Yeah, I don't look at RSI anymore, to be honest with you, because I have all these blocks, right? I have 10x bars. So the 10x bar is telling the RSI for this one in particular is 43. So I am looking at the RSI, but I don't have it indicated here, but this one, the RSI is 43. So yes, to answer your question, yes. But I just have different 10X bars that tells me that.
Okay. All right. Appreciate it.
No problem. Yeah, for this one, I really like this trade. I like Roblox. It has earnings next week. So depending on what it does, because we always say we want the market to show its hand and then we capitalize on that. Right. So it's important that we let the market, we don't want to impose our will into the market, because if we try to do that, we're always going to lose. The market's always going to beat us up. But if we just watch what the market does and we go with the market, right? We always say the trend is your friend until it ends. If the market is going down or that stock is going down, you buy puts. But if that stock is showing strength and vigor, you buy calls. Make sense? And sometimes you got to wait 15 minutes. Sometimes you got to wait till the end of the day to be sure, right? But one thing is definite. If the market is bearish and that stock just opens higher than whatever the previous closing, right? That closing day. So for example, if Roblox opens, let's say it opens at $68 and it just goes above $70, what it closed yesterday, I'm jumping on a sucker. Makes sense? Because now it's telling me that it has a lot of strength, right? Especially in this market. So if that sucker just opens at 68 and it just goes to 72, I'm all over it. I'm jumping on it. I'm stopping everything I'm doing. I'm jumping on that trade. Make sense?
Yep.
Yeah, that makes sense.
Yeah. D is driving. She was gonna show us a stock that she had looked at, but I don't think she's available right now.
I'm getting ready to pull over in about 3 minutes or less.
Yeah, the market's about to open in 3 minutes. I think everybody wants to trade.
Right. Hey, I was just about to say, you got 2 minutes. You got 2
I know,
minutes.
right?
I won't be paying much attention to you. I'll be looking at lemonade.
Neither will I. I'll be looking at my carnival puts.
Oh, you got carnival puts?
Nice. Yeah. So I'll tell you guys what happened. When everyone was getting into carnival, because I got like a work call, I missed my mark, right? So I ended up losing money on my call, but I was like, market's gonna crash. It's gonna go down later on this week. So conversely, I'm getting it back. I already want it back with my puts where the price range is at right now. I'm just waiting for it to go down more. So that's like as Ariel said earlier as well, when you balance it out with your puts and your puts and your calls, that's what I intended to do. So instead of just looking at my carnival loss because I didn't get in when I wanted to and didn't sell when I wanted to and was like emotional, like this sucks. I looked at the charts to see exactly what carnival was going to end up doing and looked at the forecast of the market as well, and I was like, okay, it's going to come back down, and I played the downtrend to get my money back.
Smart. And if you see right now, carnival is actually down about 40 cents right now, right? So it has that gap right here. So it's at 2260, 2270 something. So it's going to easily fill this gap, right? Most likely it's going to fill this gap. And you know what happens if today's red and it goes down, that sucker is going to test $22.30, right? Easily coming to, let me make a quick little prediction on this bad boy. So easily coming right here, right? I say the next 48 hours, you should easily see carnival coming to $22 some change. So your puts are going to do very well. Yeah, by today you should be at $22 and like $22.12. By tomorrow, you probably see it at 21s, higher 21s. Check out this lemonade though. So who's gonna trade lemonade with us?
Who? Me? I'm ready.
I want to look at.
Yeah, I'm
those.
in.
So you're gonna buy puts on Lemonade, right? I'm just following. Not gonna play.
I can't play. Got me a limit now. I did my 3 trades for the week.
Okay, okay. Hopefully they're all winners.
Actually was, man. It definitely was. So I definitely need to post something. It's not as I got out a little bit too early.
Okay. Yeah, that's definitely good, bro. I'm glad they were winners. I'm about to sell my stuff on. Airbnb. That's the one I was looking at too. This is crazy. Like,
Castro, how far out are you looking for the puts for Lemonade?
uh,
2 weeks.
yeah, I'm buying right now. I'm looking for it now, just next week.
Okay.
Why this thing won't let me sell? I swear, like I truly like despise Robinhood. Like my Disney, it does not even let me sell them. I got 20 of them. It's refusing to let me sell them.
Got to replace the order. It's because of the opening bell. It's high demand, and it
Yeah,
does.
it's usually that bid ask.
You got to redo it a couple times. Sometimes I have to do
Yeah.
it 2 or 3 times.
It's not even showing how much I'm winning on it. It's just showing me what I'm winning yesterday. I'm at 71% yesterday. Like it's still showing me the same thing from yesterday. Wow, this is ridiculous. This is ridiculous. It's still showing me my prices from yesterday. Like it's showing $3.30. It's telling me to sell it for $3.30. Like, come on now, seriously? This is what I don't like, Robinhood. I'm gonna lose all this money. Wow. Is that how it works for you guys too?
Yeah, some
It's
days
like
it's
fro.
like that.
Yeah,
I'm still-
that's it. Like, so yeah, that's how it works with freaking Robinhood, man. Because like I put a stop limit, and it will blow right past the stop limit on whatsoever and still go down like, hey, you know what I'm saying? I'm like, yo, this shit is crazy, man.
This is like now I'm losing. I lost money now. I literally just lost a whole bunch of money on Robinhood. Wow, that's crazy. That's crazy. I just lost like so much money. This is fucking insane. I'm selling it for what I bought it yesterday.
Oh, that's really sad, Castro.
Yeah, that's crazy.
Why did
Like it's
use? I mean, I'm not trying to put stick a knife in you, but why Robinhood versus like TD or some other platform that's more if Robinhood's going to cost you like that?
because I did a challenge here, right? And the challenge was for me to use Robinhood, but Robinhood is such trash. Let me stop recording this.